Lululemon may be looking for a potential buyer for Mirror, as the connected fitness landscape has seen a significant pullback in terms of demand. Yahoo Finance's Brad Smith has more on the athletic footwear and apparel company's latest strategic ambition. Hey, Brad.
Hey, Rachelle. Yeah, hardware is hard, as the old and sometimes overused Mark Andreessen saying goes, and Lululemon may be making amends with that just under 3 years after acquiring connected fitness device company Mirror for $500 million. The company is pivoting while also looking for a potential buyer and has engaged in talks with Hydro, according to CNBC. Now, what you will remember, of course, about this Mirror product is the cost of it, both pre-acquisition and the current price. One of the benefits that Lulu had touted about this is how they were going to be able to turn this into even more of a subscription model and bring down that headline price for a lot of consumers. However, this pivot goes further with what they have really laid out with the strategy from here. During the Q4 earnings call, CEO Calvin McDonald acknowledged this: while members love our content, hardware sales did not match our expectations. And even though our customer acquisition cost, the CAC, has continued to improve, it has not improved enough to maintain the current level of investment. And as we continue to invest prudently in this business, we are evolving the model from being focused on hardware only to offering content through a digital and app-based solution as well. Now, it's no mystery here that connected fitness has struggled post-pandemic after the reopening of gyms and boutique fitness classes, of course, has thrust more attention back into that IRL fitness experience, whether you're going to Planet Fitness or perhaps one of those boutique exponential fitness type of realms. Analysts are continuing to watch this, especially given the number of Peloton devices even out there within the connected fitness device landscape that for some homes have just turned into an alternative rack for your clothes. So now the larger question for a company in Lulu that's made this investment and is trying to figure out what that next step is, Lululemon already plans to offer a new, more efficient app-based model. That's going to launch this summer. They talked about that recently. And this is going to come at a lower monthly subscription rate. They're combining that with their 9 million growing Essentials members, and they're hoping that it allows them to expand their total addressable market, that TAM, for potential members here. But all of this comes, of course, with the larger question in mind of, in the fitness landscape, where is there going to be more of the opportunity to really meld this experience together between some of the larger devices that have been in the wearable fashion or installed in people's homes, all the way into how the apparel manufacturers have looked at where they can sell further into that audience and really bringing the two sales efforts closer together. I think what this also signals, though, too, is in the talks between Lululemon and Hydro, perhaps, where else they may have tried to drum up some interest or demand generation, or perhaps a potential acquirer. There was a lot of talk around whether Peloton should sell to Apple. Well, should Mirror sell to Apple? It's a big question that's out there, as Apple has even more ambitions in the connected, or at least the fitness plus landscape, if you will, Rachelle.
No, you raised a good point there, and have to keep in mind also consumers looking at a tougher economic situation, whether they want to splash out on some of these devices as well. Great stuff as always. Yahoo Finance's morning anchor, Brad Smith. Thanks so much.